In this morning's Eye on the Money, the IRS has launched new online tools to help millions of families manage cash payments they could soon receive from the government. The American Rescue Plan passed by Congress in March increases the maximum child tax credit from $2,000 per child. It goes up to $3,600 for each child under 6 and $3,000 per child ages 6 to 17. The program begins paying families monthly starting July 15th. CBS News business analyst Jill Schlesinger is here to walk us through the key details. Good morning, Jill. Long time no see. Want to get straight to it. Besides the dollar amount, what's the biggest difference in terms of this year's child tax credit?
This enhanced credit is divided into two payments in half, and families that are entitled to it will be starting to get 6 monthly checks. OK, so starts July 15th. You'll get half of that credit from July through December. And then the other half of the credit you will claim when you file taxes next year. So this is quite different because in the old tax credit, you just filed your tax return. So again, half and half starts up July 15th.
And who exactly qualifies for this new child tax credit payment?
Well, of course, it's called the child tax credit, so you've got to have a kid under the age of 17 by the end of this year. So by December 31st, you have to have had a child. Okay, but then there are income thresholds, and these are really important. If you are a single filer, you will get the credit if you have up to $75,000 of income. For head of households, $112,500. And for married filing jointly, $150,000. So those are the qualifications. I also want to make sure people understand, if you didn't file taxes, there are some Americans who don't have to file taxes. There is a tool, a portal for the IRS at the irs.gov website, and you can actually put your information in there, and that will entitle you to the credit.
Well, that sort of leads to my next question, Jill, which is what do families need to do to get this money?
The vast majority of people, birthday boy. Oh, see how I slipped that in?
Dear.
The vast majority of people don't have to do anything. Now, this is really predicated on what has happened in the past. So if your income is about the same as it was last year, if you have the same number of kids, your address, your bank account information, you really don't need to do anything. The IRS is proactively going to take action. However, if something has changed, you do want to go over to that IRS website, irs.gov. Again, it's the Child Tax Care portal, and you want to change the information. So the reality is that if you have a sort of a similar situation, no action. If there is new information, update.
We mentioned the higher end thresholds for qualifying. On the lower end, I was reading, even if you don't make enough to pay federal income tax, you still qualify. It's totally refundable. I wanted people to know that. If the IRS says you qualify, but then your income went up over this past year, Jill, what do you do?
This is really tricky because this is unlike anything we've seen in the past. So a lot of people made lower amounts of money last year during the pandemic. Maybe your old information that the IRS has would make you qualify, but this year you might be making more money. So you are being asked by the IRS to actually opt out. This is incredibly important because you have to be proactive. So to opt out, you go to the irs.gov website, and there is a form there, and you just click through it. And the only reason you're opting out is because you think you make too much money this year to qualify for the credit. Now, I would advise that if you think you're sort of on the bubble, you're not sure whether you qualify or not, you can still opt out. And that way, next tax season, if you do qualify, you can get that full credit. But it's better not to get the money this year, because if you get it and you don't qualify, you have to pay back that money to Uncle Sam next tax season.
Yep, payback time. Jill, thank you very much. Jill Schlesinger.